It's always good having you with us here on the program. Our Alpha Manager of the Day is also with us now. Aditya Sood is Portfolio Manager at InCred PMS. Aditya, it's always a pleasure having you here on CNBC-TV18. Thank you for your time. I just, to begin with, I just wanted to get a sense from you in terms of how earnings for your portfolio companies, and I have a list of stocks that you own, how's earnings really been for the third quarter? Because overall, there have been kind of more disappointments as compared to positive surprises. But for your portfolio, how have things been?
So I think so broadly in terms of sectoral performance, we have seen, earnings upgrade in financials, particularly on the lending side. We have seen modest set of earnings from ITES companies. Basically, I think so there was a very wide expectation that, this being a quarter of furloughs, and there was also expectation of some bit of slowdown. Obviously, we have not seen that panning out. We had moved to a overweight stance on IT, in the last quarter, and that is a massive overweight stance because, we see it as a once in a 10-year sort of opportunity wherein the best time to buy ITES is possibly this year because, last year we saw a decline of the index. It was the worst performing index in the last calendar. The index itself was down 22% odd. But coming back on earnings, I think so what has, clearly stood out is a combination of various factors. There are divergent trends within the sectors. And that is what I've been consistently pointing out. So for example, if you look at a company like Newland Labs, which we own in the portfolio, versus its performance vis-a-vis the sectoral leader, which happens to be DVs. Clearly, the performance has been very, very different. If you look at Phenolics Cables, it has been consistently gaining market share. And that is the reason why these companies seems to be, sort of doing well. So our view is that, it is going to be an excellent environment for bottom-up stock picking. Now we can clearly see margin pressure getting abated. There was a considerable element of one-offs in the year gone by, in the sense that we had a lot of B2B businesses which have never reported a loss in last 10-15 years reporting a loss. These are very, very good balance sheets. I mean to say most of these companies that we own would be zero debt, net cash balance sheets. So what we have seen is that, clearly one can see that, there is going to be a stock pickers market because clearly as far as the index is concerned, there is very limited headroom for the markets to move up from here on.
Aditya, afternoon. One of your big bets is Tejas Networks, and I see it has a 7.5% weightage in your portfolio. Are you satisfied with the performance of Tejas Networks? Because, if I look at the last 5 quarters, in 4 of them, the company has clocked in a loss. They have been hit by supply chain challenges and the issue of getting the required equipment. It fits your criteria. It's got no debt. It's got ample cash on its book. It's got great pedigree. Tata Group now owns it. But the company has been hit and it's going through a challenging time. So are you satisfied with the performance of Tejas Networks and your thoughts on the outlook?
So I think so. This is a trade-off between thinking short-term and long-term. If you look at what Tejas is essentially today, what we find here is that, the total addressable market for a company like Tejas is expanding at a very, very fast pace. One of the reasons possibly why the stock is up today is on account of a news item wherein, possibly Tejas is going to be a preferred vendor for the BSNL contract. Now, this doesn't come to us as a surprise. Obviously, like any other government contract, it takes time for the government to award it. Clearly, in terms of capability or in terms of pedigree, if you look at with Tata Group coming in, what we believe is that, 4G to 5G transition is going to be the most critical bit for a company like Tejas. Secondly, if you look at the number of people in R&D, the headcount has doubled post Tata Group coming in, which is now closer to 850 odd people. So we believe that, this could be a company wherein the total addressable market is expanding at a very, very rapid pace. Secondly, it was obviously marred by one-off supply chain issues. Thirdly, obviously, the balance sheet here itself is net cash. So our view is that, with the combination of various factors, what we see here happening is that, profits can, possibly, quadruple from the low that they made in 2020. So I would regard 2021 as a one-off year in terms of 22 as a one-off year in terms of corporate profitability. And part of our thesis has to do with mean reversion. Obviously, the TAM is going to expand rapidly. So it is about what the company can deliver. And what we have also seen is that there has been an intermittent correction. The stock rallied from 400 to 800 odd levels, and now it corrected to 530 odd levels. What we are utilizing here in terms of positioning is that we are utilizing this volatile environment to build up weights in the companies that we like.
Okay, so I'll try and squeeze in one last one, Aditya. And I was looking at your holding in BEML, and that's an interesting one as well. Obviously, we know that there are big players across, whether it's metro services, obviously defense, and a couple of other sectors. What gives you the optimism? Because the stock, despite its large order book, the stock has been in a range over the last 1 year or so. It hasn't seen the old highs of 2000 odd. So where is your optimism coming from?
Sure. So there are various factors. First of all, the biggest factor that is going to drive performance of BEML is going to be the TAM for the Vande Bharat. As we understand it, that Siemens has a JV with BEML for the Vande Bharat Express. I think so. It is a well established attempt of the government that we are going to have 200 Vande Bharat trains. What it would mean is that there is going to be a 37,000 crore opportunity for the L1 contractor here. BEML, possibly their scope of work is going to be 8 to 10,000 crores. Now you look at the defense play that BEML has. Obviously, they have been manufacturers of Tatra, so on and so forth. I think so. They have an addressable TAM of 20,000 crores over the next 5 years. Out of that 20,000 crore, 10,000 crore is going to be nomination-based tenders. Obviously, it is also in the strategic divestment list. As far as the government is concerned, our view is that smaller divestments are easier to make as far as the government is concerned, because clearly we are heading into an election year. So our view is that again, TAM expands. More importantly, if you look at the P&L of this company, employee cost, which was as high as 27% of P&L, is now down to 24%. This is a business wherein you don't require average cost of employee of what BEML has, which is in the vicinity, in northwards of 20 lakh rupees per employee. A lot of these employees are up for retirement, in the sense that next 2 years there is a clear-cut glide path of 800 odd employees retiring. So we believe that earnings are going to surprise in a company like BEML, because there are clearly multiple tailwinds. So this is a very simple way of playing Make in India with a lot of option value. That is how we see this stock.
Okay, all right, Aditya, always good hearing your thoughts on specific stocks. Look forward to chatting up with you rather soon. For the time, we will slip into a short break. The markets are at the high point of the day. Nimish is waiting for us on the other side. He'll tell us what's the buzz in D Street Chatter. We'll also get you our technical